Simplicity does not precede complexity, but follows it. Alan Perlis. Great training for subscribers. And again, you subscribe for free at chartingwealth.com. Great training today regarding simplicity. It is about seeking consistency and reliability, not complexity and quantity. My friends, thanks so much for being with us. I appreciate being able to come to you every day and share this information. People ask me why I do this for free, and the reason is because what I do for you every day forces me to be in the market every single day, to pay attention, to be involved, and I learn more by teaching than I ever did by doing. And now I do and teach, and it is amazing. You gift me by being here and allowing me to share this information. I love the market. I love the way it moves. It is better to me than many other things in life. It never ceases to be dynamic and challenging and amazing. Let's jump into these charts. I wish you the same in your quest. 10 to 15 minutes a day, that's all we ask. Stocks are up. Bonds and gold down. As far as the New York Stock Exchange Bitcoin Index, it is flat. Let's go now to the S&P 500. How did we end the week? Well, after 4 weeks of strong down movement, this week kicked over, penetrated the weekly trend line. Price percent oscillator is flat. Derivative oscillator is flat. Green open box, spinning top. And you can see where it blew through that weekly trend line and the 2-day. What is that telling you? that there's a problem if you were staying in that trade. Now, nothing to say you could not have, but again, as you look at what's been going on over the last 2 days with this big green up candle, it hasn't crossed over. People say, well, don't I stay until the 2-day crosses back in the other direction? I guess you could. That is like the emergency, hey, you're now getting into idiot territory if you stay in. No, there are plenty of reasons why. And again, based on your experience, based on the fact that you're in the market every day, that you practice trading as much as possible, that you're becoming intimate with a particular set of stocks and or ETFs, you learn their personalities. That's why we talk about needing to be in the market every day, needing to get we teach our advanced market mastery students to get a collection of stocks, a quiver of anywhere between 6 to 8, no more ever than 10. And again, you're pushing it then because imagine if you have 6 children, it's much easier to get to know them and really understand them than if you have 10 or 12. We all have friends who have lots of friends and don't seem to know any of them very well, as opposed to having a few intimate friends. That's the difference. These stocks, ETFs, they become your friends. You learn their personalities. You know what works and what doesn't work. And you also, as they age, they change. They can change. Things that worked in the past don't necessarily work in the future. Usually things, fail slowly. It's like the stock gets older and matures and different things happen. So you learn from that. You learn by doing, by being with it on a daily basis. So we see on the 2-day chart, don't have a crossover yet, may happen soon. Derivative oscillator losing downward momentum, price percent oscillator spiking up. Now it could turn over and spike back down, penetrate through the weekly trend line and down through the 2-day, might give you a reason for jumping back in. And we look at what 4 hot big green up candles just going higher and higher on the 195-minute or half day, as we tend to call it, chart. We see the price percent oscillator, derivative oscillator spiking. We see where things blew through that weekly trend line on the half-day chart back in the morning on Thursday and just kept going up. That's where we are on the S&P as we end the week. And of course, it was a great run, 4 weeks down. Not saying that it has to be over. It could start itself back up again. We'll just wait, watch, and see. That S&P was up 0.76% for the day. The Nasdaq 100 up 0.63% for the day. How did it end the week? With basically a green doji. That means lots of indecision, tending up. Price percent oscillator flattening, derivative oscillator still gaining downward momentum from 3 big weeks of down movement. Penetrated the 2-day, but you can see that price has not penetrated or has not closed above the weekly. It did penetrate it. And each time things like that happen, they mean things. Okay? Wick on top and on bottom means something. A doji means something. Price penetration but not closing above means something. Price penetrating below, again, means something. And you put all those things together as you learn to help you in your decision-making process. And this is about what you learn and how you apply it. Everybody's like, well, I need a hard and fast rule. There is no hard and fast rule. This is a dynamic, ever-changing, complex system. You have to experiment. You have to continually practice trade, even when you're trading real money and you want to learn new things. If you're a big bull, and the bull market we've been through, you've trained up on that, you feel great about bull markets, but you want to learn how to be a bear, you've got to practice that. You just don't start dumping money into things. Same with your practice trading. Same when you graduate to fractional shares, fractional trading. All those things you got to pay close attention to. What do we see going on the 2-day? Of course, penetrating the weekly trend line, blew through over the last 2 days. The 2-day trend line, price percent oscillator heading up, derivative oscillator heading up. Both of those are still negative. What about the half day? Again, like the S&P, 2 days of strong up movement. Now that appears to be slowing as those candles get smaller, but still moving up, blowing out over the last 2 days. The 2-day trend line on that half-day chart. And we also see it blowing through on Friday, the weekly trend line. That's where we are on our stocks as we end the week. Let's move on to 20-year bonds. They are down for the day 0.58%. This solid green candle that did reach, well, let's see, it low, I've already done this once this week, I just can't remember, 141.45, 141.52, so it went a few cents lower this week. Solid green candle means slow down in the go down. Price percent oscillator negative, still going down a little bit. Derivative oscillator gaining downward momentum. Price is below the weekly trend line, so that's a good sign. What about the 2-day? We can see where we blew through the 2-day over the last 4 days. Still negative though. Got up to the weekly as far as where the wick on top went on this last candle, the Thursday, Friday candle, but did not penetrate. So all of those things mean things. And again, learning what they mean, noting them down in your trade worksheet, your daily market worksheet. What you'd be filling out now, of course, is the weekly market worksheet. Learning from what that impact actually means overall is extremely important. What do we see with the half day? We can see where the half day penetrated the weekly and then came back through it. So that's something to pay attention to. That happened on Friday. And we see the derivative oscillator still positive, losing momentum. Price percent oscillator still positive, lost some momentum also. So we'll keep an eye on things when it comes to 20-year bonds. That's where we are as we end the week. What about gold? Man, gold had me excited yesterday, my friends. Up, gosh, it was up 1.5 something percent. It's down today, 1.59%. And of course, you can see that nice long wick on the top, but a little green candle at the bottom. Some down movement, mostly up, but you can see how it was paired off. Price percent oscillator also lost some of its up moving energy, still negative and flatter than it was. Derivative oscillator, in fact, losing some upward momentum. Well, it's losing some downward momentum, forgive me. What do we see on the 2-day? Well, the 2 days kinked. It had been heading up and, of course, lost a lot of its energy. Derivative oscillator still heading up. We can see wicks on top showing us where some of that energy had been carved off. Prices above the 2-day, and we had that 2-day crossover back on Wednesday the 13th. So that is where we are in gold on the 2 big charts. Let's look at the half day. That's where we see things spiked up, particularly on Wednesday morning, and then up some more on Thursday. morning and then losing some, well, just sort of petering out Thursday afternoon and then dropping on Friday and just penetrating that 2-day trend line on the end of the day. Price percent oscillator heading down, still positive. Derivative oscillator heading down. So my hope that gold would really be hammering up, that got a little waylaid. So much for gold. That's what it's sort of done to us lately. Keep waiting for it to take off. Maybe it will. We'll just see. Okay, let's move on from our big four to Bitcoin. How did Bitcoin end the week? Nice big green up candle. Price percent oscillator pulling away from the red signal line. Derivative oscillator heading up on the weekly 2-day. Looking decent. Now again, just flat this latest 2-day candle, but above that 2-day trend line. Price percent oscillator losing a little bit of that prior momentum. Still heading up along with the derivative oscillator. Half day just sort of flat sliding sideways. As far as the Heikin-Ashi candlesticks go, price percent oscillator negative, heading down a little bit. Derivative oscillator about flat. That's where we are, folks, as we end the day. Thank you again to all of our Patreon supporters. Hope you enjoyed those 20 weekly vertical crossovers. Only had 2 going down. And, of course, we had 18 going up. Hope you found some good things to practice, trade. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.